Hey friends, in this video, I'll be showing you how I manage my trade logs. The reason why you want to have a trade log is to track how much you earn via options trading and more importantly, how much you might lose. By the end of this video, you should have a trade log for yourself to track everything and make sure that you are always earning money using options trading. If you haven't watched my first video on how I earned my first $100 using options trading, be sure to watch that video first before watching this video. I'll demonstrate this from the very start, from choosing a stock, selling cash covered put options, then putting those information in my trade log accordingly to make sure I'm tracking everything. And this is a compulsory thing for anyone who is doing options. The stock here I've chosen is Palantir, but you can choose any other stock of your own preference. I will be selling a cash covered put at $6. First steps first, I'll go onto the platform, type in PLTR, which is the stock that you have chosen, go to the options chain accordingly, choose the expiration date. If you aren't sure what put options are, let me get you up to speed. If I sell a put option at a strike price of $6, I have chosen an expiration date which will end on the 10th of February. I'm essentially saying I promise to buy 100 shares of Palantir at $6 and this promise will be valid until the 10th of February. In the case if Palantir drops below $6 by 13th February, I have to buy 100 Palantir stocks. Minimally $600 must be in your brokerage account. This is a trade law I'm using. I actually copied it from Kelvin, who has his own YouTube channel, Kelvin's Learns Investing. I had a podcast with him quite a few months back. The first thing you put is the entry date. So today's date where I'm making this video will be the 5th of January. So I'll type 5th January 2023. Symbol, type in the ticker of the company you've chosen, which is Palantir. So it is PLTR. The strategy, I'll then put here sell puts. Or if you want to put cash covered puts, that's also fine. The strike price will be $6. Expiry date would be the 10th of February 2023. Quantity, this depends on your appetite of how much you want to risk to earn money as well. For now, I'm only going to trade one contract. There are all these other metrics and I will then run through them accordingly. This is where there's more information over here, where they'll tell you on this trade, there's a max return of $27. The break-even price for it would be $5.73. The maximum amount of money you can lose is $573. So basically explain in layman terms why accordingly. But first steps first, I want to know how much I will earn when selling this put option. You can look at the bid and ask spread and there's a difference of 5 cents, 27 cents and 32 cents. So basically there's two groups of people. One group of people only willing to sell the put option at 32 cents. There's another group of people who is only willing to buy the put option at 27 cents. I know I have not elaborated in detail what buying put options mean, but for now, let's just focus on selling. The next thing I'll do is click order and make sure you are clicking sell order. Quantity, just click one. Order type, I think is fine. You can click market order. Time in force, I think it's fine. So the next thing you'll click is preview. Sell one Palantir for about 30 USD. Order type market, time in force day. Commission, this is the amount of commission that you need to pay to the broker for this transaction to occur. And total, $28.78. This means that I will collect $28.78 for one contract. What I'll then do here is go back to my trade log and copy this amount down. And tada! If I do execute this trade, I will be earning $28. So in this column, I've actually added a column called closing target. Usually for cash covered puts, I would want to earn about 80% of the profits and buying back the option accordingly. The next step is to actually just put it as open because this is an open contract, meaning to say that you are obligated and legally bounded to this promise that you have sold. In the case if Palantir drops below $6, right, you must be prepared to buy 100 Palantir stocks at $6 each, which is $600. The max profit here would be then $28 because in the case where Palantir is way above $6, then you can keep all the profits accordingly. Then there's the next column, which is the probability of winning. You can actually input the specific probability that you'll win the trade, and this is actually calculated by the broker for you. So if you click around, this is where you'll find the profit of probability, which is 76%. 76%, you just copy it here. Then there's this next column called margins. If you to look at Google, right, a margin is used as leverage to increase buying power, whereas an option margin is used as collateral to secure a position. This is used by the broker to make sure that you have enough money. So in the case where the stock price drops a lot, right, they know that you have enough money to sort of repay them in a sense. So I'm doing a terrible job explaining margins here. I'll probably do that in another video. It's very, very important to take note of how much margins you're taking up for every trade that you're using. In this case, not sure why there is not any margin taken. In general, right, if you're selling a cash covered put, just put the amount that you need to make sure you have in the case where Palantir drops below $6. So maybe I'll just put $6. I know this might not be right, but I'll just put it here for my perspective. Another column that I have here is ratio. I'm dividing the max profit with the margin that I'm using. Ideally, lower the better. I don't want to be using too much margin to help me earn that particular profit for each trade as well, because I don't want too much of my margin to be blocked out in my account. This is where I would say is very, very important if in the case, right, Palantir is not the company that you have chosen to hold for the long run. So what I'm doing right now is trading. The main difference between this video or the video which I made on how I first earned $100 via options trading, this is purely a speculative trade for me to earn money. It's not for investing purposes. If you are a total beginner, right, then I would say probably you don't want to think too much on this, but nonetheless, I'll still explain what this column is about anyway. If you go back to the options broker, right, it'll tell you what's your max loss, $573. That's the maximum amount of money you'll lose. How do you get to this amount? So let's backtrack. We are selling one put option at $6 strike price, which would end on the 10th of February 2023. In the case where Palantir goes down to, let's say, $1 or $2, right, you still have to fork out $600 to buy 100 stocks of Palantir. And the reason why the max loss is 573 is because you will earn $28 when selling this put option. So when you earn $28.78, this is assuming the worst case scenario where the stock price of Palantir drops to absolutely zero. Imagine you have to buy 100 Palantir shares at $6 each, which will amount to $600. And imagine if the actual stock price of Palantir would be at $0. That is the worst case scenario that can happen. It is very unlikely, but sometimes it does happen. So you need to be very, very careful. In this trade, this is what we would call undefined risk, because there is a risk of you losing all your money if the stock price drops to zero. So it's very, very important to choose the right stocks to trade options on. That's how you get a max loss. Usually for me, if the stock price of Palantir drops below $6 and I actually don't want to spend my money to buy the stock, right, I'll just make sure I put a stop loss at 20%, which means that if I lose up to $114 on this trade, I'll immediately exit the trade and just take my loss for now. What does this mean? If I lose $114, that means, right, when I sold the insurance to buy 100 Palantir stocks at $6, it was worth $28. But if the stock price of Palantir drops to, let's say, $5.50, right, it'll be more expensive for me to buy back the option accordingly. So if the max loss of it is 114, right, probably the amount of money that I need to fork out to buy back this option would be $142. This is where it comes to the emotional side of trading, where if Palantir stock price drops below, let's say, $6, which is what I have here on the yellow line, if there's a thought at the back of your mind, right, praying that Palantir would recover back to $6, right, that is where the emotional side of trading comes in. I've not actually elaborated a lot on the emotional side of trading because it messes with your mind, to be honest, and that's where it goes into very dangerous territory where you need to learn a lot more about options. Learning the theoretical knowledge of options is very easy, but learning how to manage your emotions is even more important, because you could potentially lose tens of thousands of dollars if you are not careful with how many contracts you trade on. But that's for another video. But do ensure that you have put the max amount of loss for every trade that you do. The next thing I would like to do is put the number of days to expiry. The opportunity to earn on options, right, is on the last 30 days in general. If the options trade is below 30 days, right, I'm a little bit more careful when it comes to managing the trade itself. So if it's below 30 days, do pay a little bit more attention to it. Total option duration, I just want to understand the maximum amount of days that this options trade can last. Delta is something I probably wouldn't elaborate too much in this video, but there's this additional column here that you can put delta. In general, how I use it as a noob options trader, right, I use it as a proxy on the probability of success. So basically, if the delta is about 0.28, right, I take 1 minus 0.28, then I'll get about 0.7-ish, which is also the probability of success if you do calculate it over here. The specific definition of delta is a theoretical estimate of how much an option's value may change given a $1 move up or down in the underlying security. It's a little bit more complicated. I myself also, I'm not too sure, but I do definitely use it to just measure the probability of how much I will earn and the success of the trade itself. One thing I like to track would be the current profits of the trade at any one time. So of course, this is a new trade, right? There's no current profits for now. If I can elaborate on the previous trade I made on the 29th of December, I sold 2 put options with a strike price of 120. They will expire on the 27th of January. Essentially what this is saying in layman's term, I promised to buy 200 Apple shares at $120 each, and this promise will be valid until the 27th of January. Basically, I've collected $460. Right now, the current profits of that option would be at negative $52. So if I wanted to buy 2 of these contracts back, right, 460 plus 52, it will cost me 512 because the stock price of Apple has actually gone closer to 120. For a put option, right, the closer that it goes to your strike price, right, the higher probability that it will lose money. The most important thing is that by the expiry date, it must be above 120. So for now, I think I'll still pay close attention to the markets. You need to take note if the price continues to drop. And if the price does continue to drop, you'll likely then want to roll your options if you don't want to buy the stocks itself. Right now, this for me is actually more of a trade. I actually don't intend to buy 200 Apple shares at $120 each. In this case, I will change my mind and roll it for now. I'll link a video below on how to roll your options. The last thing I'll then add to this trade log, right, would be 15 DTE earnings. So I want to know 15 days away from expiry, how much profits would I earn accordingly. So first things first, right, I'll go to the last trade date. For me, I like to go to 15 days before the option expires. So February 10th, 15 days before February 10th is maybe about 26th January. 26th January. This is actually the calculation of how much you might earn or how much you might lose. So let's say if the stock price of Palantir is at $7.24 by 26th January, you will earn about $23. If the stock price of Palantir is at $6.58 on 26th January, you will earn $13. If you go to the other side of the table, if the stock price of Palantir is at $4.61 on the 26th January, you would have lost $112. So this is just a rough calculation of where the profit margins is. In terms of 15 DTE, right, 15 date to expiration earnings, if the price of Palantir is at $6, right, that means I would still be slightly negative, because if you see these two prices over here, right, $6, maybe I will just lose about $8. That's the thing I definitely need to take note of when trading options, just to make sure, okay, what's the time horizon in terms of earning money, which is the most important thing. That's it for this video on how to manage your trade log. Always remember to track your trades, and be sure to watch the next video on me talking about how you can sell covered call options. And this is another way to earn an additional income using options trading.